guys, you are welcome to Crypto Signal Academy. Today we are just doing a little update about our previous signal we gave last week on Thursday. We're just going to do a summary about how we were able to analyze the market and how the market is turning out. Now it's almost a week. Today is Friday. It's almost a week, and the market is really going according to plan. You understand? I told you on a 4 hour time frame, we saw a very good trading pattern, which was inverted head and shoulder pattern. On the inverted head and shoulder pattern, you need at least a few vital points, which is including the two shoulders stop hitting a particular support, and you need the head, of course. You need the market to break through the resistance and retest it as support, then you will set your trade. So according to the 4 hours time frame, on that day was on Wednesday, on the 11th of September, we saw this pattern. So what we did was, before we were able to discover this pattern, we used an indicator, and that indicator, it's our higher high, lower low, higher high, and lower high. We use this indicator to be able to tell where our higher high is and the lower lows, just to know the trend pattern of the market. Then we picked up our tool to draw our market structure, how the market is actually going. So when we were able to discover that, okay, sorry, on our part two, so we were able to discover that from this lower high, the market went down to this lower low, and it retraces to this lower high. Then the market went down. So after that, the market continues up to this higher high, then higher low, and once the market was able to retrace, we were able to discover our resistance. How were we able to discover our resistance and support? At the lower low, the market did not break through this lower low, so this served as a support for the market because the market retraces down. But when we notice the movement of this market structure from this lower high down to this lower low, it retraces down to this lower high. There is a strong support here. This was a first support, and it was supposed to serve as a resistance for the market. But during the movement of the market, we noticed the market broke through this. So it wasn't serving as a resistance for the market. The resistance is not strong. The market broke through it effortlessly, and it retraces. But during the retracement, it couldn't break through it. So it now serves as a support for the retracement. So this support that happened during this lower low was the same support that is taking place in this higher low. So this now form a two shoulder pattern, you know, two shoulder and the head. So it's called inverted head and shoulder market structure or pattern. So then we drew a resistance line from this lower high to this our higher high. So after drawing this resistance pattern, we are waiting for the market to break through this pattern. So on that very day, we waited for the market to break through, but the market broke through with this candlestick. Come in, the market broke through with this candlestick, and it went a little bit up. Then we see that as our confirmation, and we went straight to the market, and we were able to have about 62% using 20s leverage. But unfortunately, when we see the retracement of the market and the bullish volume is getting low, we went left the market. But usually, according to my theory about trading, when the market is moving and it breaks through a resistance, it is always good to wait for a retest, especially when it's having a market pattern like this. They have different market pattern, but this is one of the patterns that when you see whenever the market give such pattern, you need to follow the rules. So one of the rules is the market breaks through this resistance, forming a very good, well structured inverted head and a shoulder pattern. And when the market was able to break through, usually what you are expected to do is wait for a retest or a retracement. So the market need to retest this resistance. Just like the way the market break through this resistance, you wait for it to retest it. So the market retested this resistance at this point. And when the market retested it, that was when we experienced a strong retracement. When the market retested this resistance, it on the Monday, on the 16th of September, we noticed a retest from the market, but we'll see if the market will be able to break through that resistance. Meanwhile, remember when this pattern is formed, when this pattern was eventually formed, we already plotted out our take profit. I will tell you how we were able to discover our take profit in a very short moment. But when the market tested this resistance, we placed our trade when we discover a retracement, a breakthrough. You see, it tested it and retraced. There was a retracement here. But we didn't place our trade at this retracement because we already have kind of like a support. At this one, there is like a support. But in this case, it will become a resistance since the market is going under it. So we want the market to go through this resistance. And when the market was able to break through the resistance, then we place our trade here. That's why you are seeing this second signal that we place our trade at this point. We put our stop loss at below, a little bit below the support, a little bit below the support, and now the market has executed our profit. Do you understand? But we have an original profit target that Bitcoin was supposed to hit 64,000, and which was exactly what happened. But how we were able to discover this is when you join your inverted double shoulder and the head pattern, uh, you take your measurement, knowing fully well that the measurement start from here, which is the lower low, down to this resistance, right? Down to this resistance, which will serve as our the point at which the retracement of the two shoulders meet. So when there is a retracement from here to here, and there is a retracement from here to here, so this will serve as our resistance that is giving that structure. That's served as a resistance here and a resistance here. So we'll draw this down to here. So obviously we're getting roughly around 11% according to plot. So the now we will now use the same measurement tool, the ruler tool, to draft our. We'll put our measurement from this point, which will serve as our resistance, where the market have fully formed a retracement. Now, from this resistance, we can now draft a measurement of 11%. Do you understand? So this should be our 11%. Do you understand? And when we are able to get this 11%, that should be our final take profit. And obviously, the market went there. But you may wonder that our take profit was a little above the where the market hit. But I guess we should have drawn our take profit at the point where the market had a retracement and retested the resistance down to this, and that will give us a very sharp 11%. So this is very, very accurate. It turns out very, very, very accurate. You can see the accuracy is very, very good, 100%. So now you may wonder how what are the next step, or what are our next expectation of the market. So in our next video, we'll be analyzing the market again. All these are like our order blocks, our fair value gaps, and the rest. So the this indicator is a very great indicator. The higher highs and higher lows, lower lows, and the rest. So it's a great indicator to help us to see the market structure, the downtrend, uptrend, and the rest. So it's a very good, great indicator. It was the indicator that helped me to discover this structure. So we will also show you how other indicators can help you find opportunities in the market and you execute your trade effortlessly. And we don't actually rely on this alone. We go to other time frame, see how the market is reacting. We confirm a lot of factors from the MACD, the market volume. We see our resistance and support. We also pay attention to the liquidity, the fair value gaps, and the rest. So there are a lot of factors we put into consideration when we are analyzing the market. But in this, it's just as simple as this. We find a very good pattern. We confirmed our support and our resistance. The market break through the resistance and retrace down to the resistance. We were able to put our trade at the breakthrough, the retracement of from the resistance, then the retracement from the support. Sorry, now it became our support, and we executed a very good trade of 100% if you are using a 10s leverage, and if you're using a 20s leverage, that's over 200% profit. So guys, you can always use this, and we also have a very good risk management. We are able to uh, reduce our risk so that we will not be uh, losing a lot of money. So in our Telegram channel, we give free signals, and we also teach people how to discover their own strategy and become a very profitable trader. So I guess that will be all for now. In our next video, we'll be talking about how the difference between risking a percentage of your trading capital and trading with a percentage of your trading capital. So it's totally two different things. What it means to risk a percentage and what it means to trade a percentage of your trading capital. So we'll talk about it in our next. Please don't forget to like and subscribe.